Somewhere right now, a group of friends is sitting around a TV, watching a World Cup match, and someone just said the sentence that starts more financial disasters than almost any other 4 words in sports. I've got a feeling. Sports betting around the World Cup isn't just widespread, it's practically part of the culture at this point. Betting apps run ads during the pre-match show. Odds appear right next to the lineup graphics. Your group chat has a betting pool. Your uncle has a system. And somewhere in the back of your mind, a question is sitting there that most people never actually stop to answer honestly. Is this smart money? Or is this just a financial trap wearing a football jersey? Today, we're going to look at World Cup betting the way a financial analyst would. Not a tipster, not a bookmaker, not your uncle with the system. Just the numbers, the psychology, and the honest math behind what actually happens when money meets a 90-minute match. By the end of this video, you'll understand exactly why the house is built to win, why your brain is working against you the whole time, and what smart would actually have to look like if you're going to do this at all. Let's get into it. Before we talk about your bet, let's talk about the business taking it. Sports betting isn't a side hustle industry anymore. It's a global, multi-billion-dollar sector, and major tournaments like the World Cup are its Super Bowl. Betting companies spend enormous sums on advertising specifically timed around tournaments like this one, because they know exactly what happens to betting volume when a global audience of billions is emotionally invested in the outcome of a match. Here's the part that matters most. Bookmakers don't set odds to predict the future. They set odds to guarantee their own profit regardless of the outcome. That's the entire business model. Every single betting market is built with what's called a margin or VIG baked into the numbers, meaning that even if bettors were perfectly split on every outcome, the bookmaker still comes out ahead. This isn't a conspiracy. It's just arithmetic. And it's the single most important fact that gets lost every single time someone gets excited about a great line they found before kickoff. Let's break down what odds actually represent, because most people read them completely wrong. When you see odds on a match, what you're really looking at isn't just how likely is this team to win. You're looking at a price that has already been adjusted to include the bookmaker's profit margin. If you added up the true implied probability of every possible outcome on a match, home win, draw, away win, it should mathematically total 100%. In reality, on almost every market you'll find, it totals more than that. Sometimes significantly more. That extra percentage is the house edge. It's built into the price before you ever click place bet. It means that even if you were an extremely well-informed bettor who genuinely understood the two teams better than the average person, you're still starting from a mathematical disadvantage on every single wager, because the price you're being offered already assumes the bookmaker's cut. This is fundamentally different from investing in a stock or a business, where the value can genuinely grow over time and everyone involved can, in theory, come out ahead. In betting, for you to win, someone else, including, structurally, the platform itself, has to lose. It's a zero-sum system with a permanent thumb on the scale. Now let's talk about why a World Cup match specifically is one of the most dangerous betting environments there is, even compared to a normal club season. In club football, a bettor can, at least in theory, track a team across 38 games, build up a data-informed view of form, injuries, and tactics. A World Cup match is different. It's often a one-off, high-stakes, emotionally charged event featuring teams that don't play together nearly as often, facing opponents with completely different styles, in neutral stadiums, under a level of pressure that doesn't exist in a normal league fixture. That means the sample size that any bettor is working with is incredibly small, and the variance, the sheer randomness of outcomes, is enormous. A red card in the 11th minute, a goalkeeping howler, a last-minute penalty. A World Cup match can swing on a single moment that no amount of pre-match analysis could have predicted. This is exactly the kind of environment where confidence and accuracy are most disconnected from each other. People feel extremely sure about their prediction, precisely because the stakes and the emotion are so high, but that emotional certainty has nothing to do with the actual mathematical likelihood of the outcome. Let's talk psychology for a moment, because this is where the real financial trap gets built, not in the odds themselves, but in your own head. There's a well-documented pattern in gambling behavior called the near-miss effect. When a bet almost wins, the ball hits the post in the final minute, the underdog nearly pulls off the upset, your brain processes that near miss almost the same way it processes an actual win. It releases a similar dopamine response. That near miss doesn't feel like a loss. It feels like proof that you were right, and that next time, you'll get there. That feeling is exactly what keeps people betting more, not less, after a loss. It's called chasing. Trying to win back money you've already lost, using bigger and riskier bets to do it faster. And it's one of the most common and most destructive patterns in all of gambling behavior, precisely because it feels completely logical in the moment. "I just need one good bet to get back to even" is one of the most expensive sentences in personal finance. There's also something psychologists call the illusion of control, the belief that because you watched every match this tournament, read the news, and know the players' names, you have real insight into the outcome. In reality, that knowledge often makes people more confident without making their predictions meaningfully more accurate, because the actual outcome of a match depends on so many factors no amount of pre-match research can fully account for. Here's where we get concrete, because the danger with World Cup betting rarely comes from one huge, reckless wager. It comes from small bets, repeated constantly, over the course of a month-long tournament. Think about the structure of a World Cup. Group stage matches, then the knockout rounds, spread out over roughly a month. If someone places even a modest bet on every single match their favorite team plays, plus a few fun bets on other matches they are watching, that's dozens of separate wagers across the tournament, each one carrying that same built-in house edge we talked about earlier. Individually, a small bet feels harmless. It's just for fun. It's just enough to make the match interesting. But mathematically, every additional bet is another instance of a negative expected value transaction, meaning that, on average, and over a large enough number of bets, the money flows toward the house, not the bettor. It's not that every single bet loses. It's that the aggregate, over time, is structurally designed to favor the platform. This is the exact same principle behind why casinos can afford enormous buildings in the middle of the desert. Not because every gambler loses every time, but because across millions of bets, the math always resolves in the house's favor eventually. There's another layer to World Cup betting that doesn't get talked about enough. It's deeply social. Betting pools with coworkers. Bracket competitions with friends. Group chats where someone posts their lock of the day before every match. This social layer changes the psychology significantly, because now the bet isn't just about money. It's about identity, belonging, and being right in front of people whose opinion you care about. That social pressure can push people to bet more than they otherwise would, purely to stay part of the group activity, or to avoid looking overly cautious compared to friends who are betting bigger. It can also make it much harder to walk away after a loss, because admitting "I'm done betting for this tournament" can feel, socially, like backing out of something everyone else is still doing. None of this is a reason to avoid watching football with friends. It's simply worth being honest with yourself about which decisions are coming from your own financial judgment, and which ones are coming from wanting to fit in with the group. So, is there any version of this that could reasonably be called smart money rather than a trap? If we're being completely honest, professional sports bettors do exist, and a small number of people manage to make betting profitable over the long run. But the profile of someone who actually does this successfully looks almost nothing like the casual World Cup bettor watching a match with friends. Professional bettors treat it like a data-intensive, highly disciplined business, tracking thousands of data points, managing strict bankroll rules, specializing in narrow markets where they have a genuine statistical edge, and treating losses as an expected cost of doing business rather than an emotional event. Even among people who take this extremely seriously, the margins are thin, the work is intense, and the failure rate is high. This is not a realistic template for someone enjoying a World Cup match on a Saturday afternoon. For the overwhelming majority of people, the honest answer is that World Cup betting isn't an investment strategy at all. It's entertainment spending, closer to buying a movie ticket or a concert ticket than to putting money into an index fund. The moment you start treating it as a way to actually build wealth rather than a form of paid entertainment, is exactly the moment it stops being smart and starts becoming a trap. Here's a mental shift that changes everything about how people approach this. Stop asking "how much can I win?" and start asking "how much am I comfortable spending to make this match more exciting?" That single reframe changes the entire financial relationship. If you treat a modest amount of betting money exactly the same way you'd treat the price of a cinema ticket or a night out, Money you've already mentally accepted as spent, win or lose. The psychological trap around chasing losses and escalating bets loses almost all of its power. You're not gambling to make money anymore. You're paying a small, predetermined amount for entertainment, and anything you win back is simply a bonus. The danger begins the moment that amount stops being predetermined. The moment I'll spend this much and stop turns into I'll just bet a little more to try to get back to even. That shift, from entertainment spending to loss chasing, is where a fun tradition during a World Cup match turns into a genuine financial problem. Because this tournament stretches across a full month, it's worth being honest about the warning signs that separate harmless fun from a developing problem. Betting more than you planned to, more often than you planned to. Feeling the urge to bet again immediately after a loss, to fix the outcome. Hiding the amount you're betting from a partner or family member. Borrowing money, or dipping into savings meant for something else, to keep betting during the tournament. Feeling irritable or anxious when you're not able to place a bet on a match. Believing that a big enough win will finally solve financial problems that betting itself has been creating. None of these signs mean someone is broken or weak. They are simply signals that the entertainment spending mindset has slipped into something else, and it's worth pausing, stepping back, and being honest with yourself, or talking to someone, before the tournament ends and the financial damage is harder to undo than a single missed bet ever was. If you're going to engage with World Cup betting at all, here's what separates a genuinely lower-risk approach from a financial trap in disguise. Decide the total amount you're willing to spend across the entire tournament before it even starts, not per match, but for the whole month, and treat that number as a fixed entertainment budget, not a starting bankroll to grow. Never use borrowed money, credit, or funds earmarked for bills, rent, or savings goals. If the money isn't sitting there as genuinely disposable income, it isn't money that should be anywhere near a betting app during a World Cup match. Avoid chasing. If you lose your first few bets, that is not a signal to increase your stakes to catch up. It's simply the entertainment budget doing what entertainment budgets do, being spent. Separate the emotional experience of watching football from the financial decision of betting on it. You can absolutely have an incredible, tension-filled World Cup experience without a single dollar riding on the outcome. The football doesn't need your money to be exciting. That excitement is being manufactured for you regardless. Zoom out from the World Cup for a second, because the pattern here isn't really about football at all. Betting during a major sporting event is a compressed, high-intensity version of a much bigger financial trap. Spending money based on emotion and social pressure rather than a plan. The same psychological mechanics, chasing losses, escalating commitment, the illusion of control, the social pressure to keep up with everyone else, show up in plenty of financial decisions that have nothing to do with sports at all. Impulsive investing based on a hot tip. Lifestyle spending to keep up with friends. Doubling down on a bad decision because admitting it was wrong feels worse than losing more money trying to fix it. The World Cup just happens to compress all of that psychology into one intense, month-long window with a betting app sitting one tap away at all times. If you can build the discipline to treat betting as a fixed, small entertainment cost during this tournament, rather than an emotional rollercoaster tied to your bank balance, that same discipline transfers directly into how you'll handle far bigger financial decisions for the rest of your life. If there's one specific bet type worth singling out during this tournament, it's the parlay, sometimes called an accumulator, where you combine multiple match outcomes into a single bet for a much bigger potential payout. These bets are marketed aggressively during major tournaments because they are genuinely exciting. Pick 5 matches correctly, and a small stake can turn into a life-changing payout. But the math behind them is brutal. Every single leg of the parlay carries that same built-in house margin we discussed earlier, and those margins don't just add up when you combine bets, they multiply. A bet with a seemingly reasonable individual house edge on each leg can end up with a combined house edge that's dramatically higher once 4 or 5 legs are stacked together. This is precisely why betting platforms promote parlays so heavily during the World Cup. The bigger, flashier potential payout draws people in, while the actual probability of hitting every single leg correctly is often far lower than it intuitively feels. Getting 4 out of 5 legs right doesn't pay out 4/5 of the prize. It pays out nothing at all. That all-or-nothing structure is part of what makes parlays feel so tantalizingly close so often, triggering exactly the near-miss psychology we talked about earlier, while statistically being one of the worst value bets available on any given match day. It's worth noting that the relationship between football and betting doesn't look the same everywhere, and that context shapes how normal this behavior feels depending on where you live. In some countries, sports betting sponsorship is deeply embedded in the sport itself, with betting brand logos appearing on jerseys, stadium boards, and broadcast graphics throughout the tournament. In others, advertising restrictions are far tighter, and betting is treated with much more regulatory caution. Some countries have robust, well-funded problem gambling support systems built directly into the industry's regulatory framework. Others have far less oversight, leaving individuals to manage the risks almost entirely on their own. This matters because the sheer normalization of betting during a tournament like this can vary enormously depending on where you're watching from. And it's worth being aware that just because something feels culturally universal during the World Cup doesn't mean the safeguards around it are equally universal too. It's worth being precise about why betting and investing, despite occasionally being described with similar language, are fundamentally different animals. When you invest in a diversified portfolio of stocks over a long time horizon, you're participating in something with a positive expected return over time, because you're buying a share of real, productive economic activity. Companies that build things, sell things, and generally grow in value as the broader economy grows. It's not guaranteed, and short-term swings can absolutely lose money, but the long-run structure of investing is not designed to guarantee a loss for participants. A World Cup bet has the opposite structure. There is no underlying productive asset, no compounding growth, and no long-term horizon smoothing out short-term noise. It's a single, isolated event with a fixed, negative expected outcome for the bettor built directly into the price before the match even begins. Confusing the two, treating a parlay like a growth opportunity the same way you treat a retirement account, is one of the more expensive category errors a person can make with their money, precisely because the language around odds, value, and risk can sound superficially similar to legitimate financial vocabulary. Every major tournament produces the same recurring story in the news. Someone places a modest bet on a wild outcome, a specific scoreline, an underdog to win the whole tournament, a particular player to score first in the final. And it hits, turning a small stake into a genuinely life-changing sum. These stories get enormous attention precisely because they are rare enough to be newsworthy. What almost never makes headlines is the far larger number of people placing similar long-shot bets across the same tournament who don't hit, because person loses modest bet as expected isn't a story anyone wants to read. This is a form of survivorship bias that shapes how the entire activity gets perceived. The wins are loud and public, the losses are quiet and private, and the resulting impression people form about their own odds of success ends up far more optimistic than the actual math supports. Being aware of this pattern doesn't mean those stories aren't real. It means recognizing that a single viral story of someone turning $20 into $20,000 says almost nothing about what's statistically likely to happen to any individual bettor watching this tournament. So, is betting on the World Cup smart money, or a financial trap? The honest answer is that it's built, mathematically and psychologically, to function as the second one, dressed up convincingly as the first. The odds are structured against you before you place a single bet. Your own brain works against your best judgment the moment a near miss or a loss triggers the urge to chase it. And the social atmosphere around a global tournament makes all of that even harder to resist. That doesn't mean you can't enjoy a bet here and there. It means the only genuinely smart approach is treating it exactly like what it really is, a small, predetermined, disposable entertainment cost. Never a financial strategy, and never money you can't afford to simply watch disappear. If topics like this, the psychology of money, the traps hiding inside everyday financial decisions, are useful to you, that's exactly what this channel is built around. Subscribe, tell me in the comments whether you're betting on this World Cup or sitting this one out, and I'll see you in the next video.